Mr. Langham, it's a great pleasure for me to welcome you here today. I would like to ask you some questions about the RBC Emerging Market Fund. First question, a lot of investors were disappointed about the returns of EM investments. Why should they invest now in EM emerging markets funds?
Sure, well thank you very much for having me. What I'd say is that if you look at most people's exposure to emerging markets, it's relatively low. Now that's despite the fact that emerging markets actually account for around about 60% of global GDP and the vast majority of global GDP growth. The performance of emerging markets over the last decade has been relatively disappointing, but what we see going back over 30 or 40 years is that the performance tends to occur in very long cycles. So we've had two very long cycles of emerging market outperformance, two very long cycles of emerging market underperformance. And we believe we're now at the stage where, because of a number of different factors, first of all the outlook for emerging markets earnings growth, secondly the outlook for emerging markets relative GDP growth, and thirdly, because we see strong signs of a relatively weak US dollar, the stage is very much set for emerging markets to outperform over coming years.
Mm-hmm. And how would you describe your investment philosophy and your investment strategy?
Sure, so I would say that in terms of our overall philosophy, it's focused on a few key factors that very much come from the lessons that I've learnt in the time I've been doing emerging markets. So I've been doing emerging markets now for about 32 years. And for me, these three factors are, first of all, the importance of management. Management that are driven to succeed, management that are entrepreneurial, management that can be trusted. The second factor for me would be the franchise. So companies may well have strong competitive advantages now, but will those advantages still be there in 5 years' time, in 10 years' time? And the third factor for me is durability, and really by this, what I mean is to what extent do companies really think about the future, do they plan for the future, do they have adequate infrastructure, adequate R&D, do they really look to build long-term relationships with all their stakeholders?
And how would you describe the highlights of the portfolio structure?
I'd say in terms of the highlights of the overall portfolio structure, it's very much driven by the long-term themes that we see as providing very strong overall growth. So these themes for us are green infrastructure, health and wellness, digitalisation, consumption and financialisation. And all the stocks within the portfolio are very much linked to these themes. And then from a stock point of view, we put a real emphasis on quality, on companies with sustainably high returns, companies with strong balance sheets, strong cash flows. And as a result of that, we feel that we're very much in high quality stocks with good growth prospects, but also stocks that from a risk point of view are much likely to be less volatile than others in the benchmark.
And you have some overweight in regions and companies?
Yes, so in terms of regions or countries, we've tended to be overweight in India, where we see very strong growth prospects. Other than that, I'd say that most of the country positions are more driven by our overall stock and sector outlook. And from a sectoral point of view, we tend to prefer the more domestic sectors, so sectors such as consumer staples, financials. We tend to be underweight in more cyclical areas.
Mr. Langham, thank you for the interview.
Right, thank you very much.
Thank you much.